Good morning. My computer's being a little sketchy. I don't know what's going on. I'm sure you guys heard that, but welcome back to the Daily Grind. I had to get another cup of coffee. It's an early one today. Went to bed late last night. What's going on? Dumpster Fire. Good to see you in the chat. Leo Lustig. What's up, buddy? Rud Puts. Man, DJ Mines. Fudweiser. What's going on? Good to see everybody. Let's see who else is here. Alexander. What's up, buddy? Good to see you as well. Nerd Beast. Dom G. My man. Overboard Tech. What's up, buddy? Good to see you. All right, anybody else that I missed, I appreciate you guys for showing up. We're gonna be talking about a bunch of stuff. Binance drama, Bitcoin, the ETF, how it's going to affect the crypto mining industry, if it is at all. There's the lady from Hut 8 is actually on with the Paul Barron Network, or was on with the Paul Barron Network, so I want to watch that. I didn't get a chance to actually listen to it in depth, so be nice to do that with you guys. So let's get into it. Let's check out the market, see what we're looking like today, and then we'll go from there. Let's see. Bitcoin 27,224, not too bad. 1,700 ETH. Let's see. Litecoin 67 bucks. Man, my computer is acting up right now, bothering me a little bit. If it gets sketchy, let me know in the chat, please. Dogecoin is a little over 6.5 cents. XRP 52 cents. Let's see. Do we have a daily rug pull? Let's check and blow this up. Oh, nope, we don't have a daily rug pull, but Maker 9.8% is up. Everything else looks pretty much down or almost even. Weird. Caspis down 4.1%, down to under 3.5 cents. Man, those KSOs are getting more and more disappointing as the days go by. I don't know about you guys. I don't know if any of you guys have one, but man, kind of brutal. Something's going on with my computer. It is super slow. I'm hoping it doesn't affect the stream today, but let me know if it does. Fear and Greed Index, we're at 52 right now. Let's check out the top 10 coins by coin market cap. Bitcoin, Ethereum, Tether, BNB, XRP, USD coin. We have Lido, Staked Ether, Dogecoin, Cardano, and Solana. Litecoin is in 15th still. So everything looks pretty much the same as it was the last couple days. All right, let's get into this because I'm excited. Let's see, still chugging away on my KS0. Yeah, so you know what, I always say KSO. I know it's KS0. I say it wrong every single time, but I can't help it. It's like a habit at this point. It's terrible. Let's see. Leo Lustig. Yeah, I have MetaMask set up on my phone already. I am mining some Octa a while ago. So you know what, I almost mined that, and then I realized that I'm done chasing shit coins. I just can't do it. I don't know. I hope it goes somewhere though for everybody that's been mining it. All right, let's get into this. So first I want to start with the Binance drama. We'll go with Mr. Altcoin Daily. This breaking: SEC files secret motion against Binance, and then it says the grayscale Bitcoin ETF conspiracy. So I want to see what he has to say. I didn't have a chance to listen to it fully, so let's get into this, and then yeah, we'll go from there. Let's do it.
We want to be transparent. We want to set the golden standard for reliability, solidness in this space.
The United States SEC has filed against Binance secretly, Binance being the largest crypto exchange on earth, much bigger than FTX, with over 120 million global users. And late last night, the SEC filed a sealed motion in its case against Binance that includes more than 35 exhibits. Now, yesterday, we updated you on Grayscale. They just won their historic court case against the SEC.
Well, you know, yesterday was really an overwhelming victory, not just for Grayscale and our investors, but for the investment in crypto communities as a whole. The panel of judges unanimously agreed with us 3-0 that the arguments we put forward in front of the court were such that the SEC acted arbitrarily and capriciously by approving the Bitcoin futures products, but not approving Bitcoin spot products like GBTC's conversion. And we really demonstrated, or rather the SEC didn't have a good explanation as to how to make a distinction between these two product types, given that they both derive their pricing from the same underlying Bitcoin market. And so this is a really, really important milestone on GBTC's path to eventually converting to an ETF.
Absolutely.
But is this a coincidence that lost amidst the Grayscale celebration? The SEC filed a new sealed motion against Binance late last night, keeping details confidential from public record.
Ooh.
A very unusual step for the SEC. One explanation is that the sealed documents relate to non-public allegations, i.e. criminal, i.e. DOJ.
Uh-oh.
And we can't tell the Binance story without a reminder, what does this all mean for a spot Bitcoin ETF? like a timeline.
Well, so today is day one of a 45-day period during which the SEC can actually request a rehearing of the case. Okay. So we have to be a little bit patient. We have to follow the federal rules of appellate procedure here. And ultimately, the court will be issuing a final mandate that'll detail the operational next steps. In the interim, however, though, of course, our legal teams will be proactively working with the SEC to try and make for an expeditious as possible conversion of GBTC to an ETF.
And let me be clear, just because the courts said the SEC can't deny a Bitcoin ETF due to fraud and manipulation in the market doesn't mean that the SEC has to now approve an ETF. Right. They could find a different reason now to deny. But while the SEC doesn't have to, I think they should use this as an opportunity to say, hey, we may not agree with this, but we respect the courts, we respect the legal system, and we'll approve all of the major Bitcoin spot ETFs and let the market work it out.
What I think would be very interesting, I don't know if this is going to happen, but it would be interesting to see the SEC approve multiple issuers all at the same time and kind of let the market figure it out. Rather than the SEC play referee and decide who goes first, who goes second, instead if they just said, look, we're going to let you guys all into the market and then let you all figure out who gets the assets, I think that may be something that would be interesting.
And that brings us to Binance. And why is the SEC all of a sudden filing in secret? Well, as explained by the former chief of the SEC Office of Internet Enforcement, John Reed Stark, he explains, this is a rare SEC tactic. Filing any court document under seal is a rare move by the SEC. The SEC is a civil, not a criminal enforcement agency. Thus, in stark contrast to criminal filings, SEC motions and enforcement actions are typically filed openly and free for everyone to read. And that makes sense. After all, it's in the public interest to know and understand the SEC's use of US tax dollars, and the US SEC also wants its message heard loud and clearer to deter future securities violations. So what's different about Binance? Well, two of the few strategic reasons that the SEC might prefer to file court documents under seal are when the filings of an SEC motion or other court documents could somehow, number one, interfere with or reveal secret details about a criminal investigation or prosecution conducted by the U.S. Department of Justice. For example, the U.S. DOJ is reportedly investigating Binance and may have convened a grand jury, and grand jury proceedings are deemed secret by U.S. statute. So if the U.S. is about to go after Binance criminally, also another thing to think about is in connection with its investigation of Binance, the US DOJ may be working with confidential informants or whistleblowers. They may have wires or other listening devices in places, or may even have an active arrest warrant or undercover operation in the works. So in John Reed Stark's opinion, that's one reason that the SEC may have filed yesterday in secret. Or, number two, they may have filed in secret as if they did it in public. This may place a witness or company at risk, which typically involves redactions rather than a full court sealing. So either one of those two options are at the top of the list. And in John Reed Stark's opinion, and this is only his guess, the US SEC's secret and extraordinary court filing, which appears to be highly comprehensive, likely touches upon non-public Binance-related money laundering allegations or other potential criminal conduct. So, in other words, my take is that the US SEC filing likely relates to an existing US DOJ investigation of Binance, which the DOJ would prefer to keep secret. And keep in mind, if nothing else, understand that this is very rare from the SEC. Now, I do not want to spread FUD. Please do not accuse me of that in the comments. I just want you to have all the information so you can make the best decision for you. But some people are saying that Binance needs to lose market share one way or another before the US SEC actually feels comfortable approving a spot ETF. You do realize what has to happen before the approval of a spot ETF, right? Well, the reasons that Gary Gensler and the SEC are always denying, for years now, have always been denying a spot Bitcoin ETF is due to wash trading, is due to manipulation and fraud in crypto in general, And if the US thinks Binance is doing that, and then also just looking at the top crypto exchanges that control the Bitcoin spot volume, Binance is 1, 2, 5, and 7. Think about this. What did the recent flurry of amended ETF applications all include? A Coinbase surveillance sharing agreement, meaning they want Coinbase to be more in control. They trust Coinbase more, but that could be entirely irrelevant to the SEC when Coinbase is just 2.2% of the total Bitcoin volume. Now, me personally, I'm rooting for Binance. I am Team CZ. I think it's cringe for anybody in crypto to be rooting against Binance when they have done so much positive for this space. But whenever there's good news or bad news, this channel will always report, will always keep you updated. Make sure you click subscribe.
Full video is in the description below. Yeah, so I mean, again, I guess it is pure speculation, and we're going to see what actually comes through with that. But anyways, let's get into the main point of today and what I really am interested in. So again, Paul Barron Network, I do have a link to this down in the description below as well. They actually talked to the Hut 8 team, or some lady that runs the Hut 8 team over there, and yeah, they're going to talk about Bitcoin mining, how the ETF's going to affect mining, and the overall just whatever there. Let's see. Jim C said the research is fine, but the FUD is real with these guys. Yeah, I mean, there's going to be speculation and FUD all over the place. Unfortunately, we're in crypto, so it is what it is. I'm just kind of going through everything that I see here today, but yeah, I guess we'll see what happens with it, the whole CZ thing. I hope Binance survives, but whatever. The problem the problem they had there was they didn't become a separate entity from Binance US. So if they were a separate entity, I'm assuming the SEC couldn't do anything to them. But now that Binance US and Binance was actually intertwined, they are allowed to go after both companies, right? Or I guess the one company, right? So whatever, that was a mistake on CZ's part, but hopefully he learns from this and they move past it. But anyways, all right, let's get into this. Let's see what the Hut 8 team has to say over here, because they are a big mining facility, if you guys don't know. And yeah, this is Paul Barron Network. Guys, go check it out in the description below. Let's do it.
Market updates, but also take a look at the miner aspect of where these markets currently stand and how maybe miners might be playing this market out here in the near future and going into the maybe more extended future. So it's going to be a good one for you guys. I think you'll like it. My name is Paul Barron. Welcome back into TechPath. Joining me today, of course, is none other than Hut 8's best spokesperson, I think, and that is Sue Ennis. Great to have you.
Hi, guys. Thrilled to be back here. Lots to talk about, so let's get into it.
Yeah, Sue, let's hear a little bit about what's happening with Hut 8 right now. Can you give us any update? I was looking at your website. I see you guys currently have a balance of almost 10,000 Bitcoin. I wish I had that many Bitcoin right now. Not bad.
Don't we all?
Yeah, we've still got a great hodl. I think really the most significant update, and there's only so much I can talk about it, is that we're in the final innings of hopefully approving our merger with US Bitcoin Corp. Shareholder voting is now open. We have a shareholder vote date for September 12th. If you are a shareholder and you want to figure out how you can vote yes, ideally for this merger, take a look at our Twitter page, LinkedIn, and on our website as well. And that's sort of the big main.
Yeah, very cool. We have been researching a lot of different narratives around Bitcoin in general. One of the things that we look at often is a couple of things that could cause pressure on miners in the future. Some of that would be just hash rate complexity. Others would be market influences like ETFs. I want to cover both of those today with you. I was looking at the 3-year Bitcoin price and difficulty level. This is kind of an interesting chart. I'm going to zoom in on this a little bit, but if you notice here, what's happened is when we have these difficulty level spikes, which is we're currently in one, and then we have these little drops within the Bitcoin price. And if you look at
that, look at how the all-time high up here, the difficulty is like in correlation to it rose above it. That's crazy.
At the history of these difficulty levels, we have difficulty levels going up, and then we have these price points going down on Bitcoin. When that occurs, And you look at, kind of just the charts in general. Some would say, well, if the difficulty level is going up, it means miners are selling Bitcoin because either they don't have the equipment to handle the difficulty level, so they're out of the business, or for a certain percentage of their business, it's going somewhere else. How would miners be able to deal with this as the technology requirement is going to be increased, which could cause some pressure on miners to actually sell their Bitcoin?
Yeah, so I think there's a lot of really almost unprecedented dynamics that are happening right now in the mining space. So right now, the 14-day moving average for total global network hash rate is about 395 exahash. And what's interesting is that hash rate continues to come online despite Bitcoin price, trading within a certain band, and we've seen quite a bit of. I think it's down about 10% week over week, but we're still seeing hash rate increase. And correct, the way that the Bitcoin network is designed is that if Bitcoin price is rallying, that is an incentive for more miners to get on and secure the network, and ultimately with the goal of winning Bitcoin. But what's changed now is that we're seeing Bitcoin price come down a little, but hash rate continue to go up. So what's changed this time around? I think what's really exciting and what's different is the fact that we're now seeing a tremendous amount of new entrants into the global Bitcoin network. So for example, there's about 6 gigawatts worth of nuclear power and renewable power that's being stood up in the Middle East. And then what a lot of the sovereign money and the sovereign sort of participants that are involved in this power being stood up are looking at is how can miners be a complement to some of our renewable grid to our new renewable grid initiative. So miners are an off-taker of demand and a very good partner in renewable grid initiatives. So where I'm going with this is that that's what's really different this time around with these dynamics of more hash rate coming on. It's not as it's usually been in line with, it's not how it's traditionally been in line with a spike in Bitcoin prices, for example, like we saw in 2021. And so also what we're seeing across the board, so about 20 to 25% of the total global network hash rate is controlled by publicly traded miners. And a lot of the publicly traded miners have successfully implemented and started plugging in more efficient machines. So for example, we're seeing efficiency anywhere from like 22 to 27 joules per terahash versus, for example, last year in 2021, that was of sort of above 30. So it's this really sort of interesting, I almost want to say unprecedented waters that we're getting into with new powerful entrants, a Bitcoin price that isn't spiking right now and kind of getting its legs back. And yeah, it's certainly, if you're a miner, you certainly need to be in a position, at least what we think at Hut, we think that there is a bit of risk of being just a single threaded miner, because if you have only sort of one way of earning income, aka mining Bitcoin, and we have a halving coming up where the potential rewards are going to be cut in half, we've been positioning our business since beginning of 2022 to really focus on other ways of generating fiat-based lines of revenue so that we're not reliant and at the mercy of some of these changing dynamics, while obviously still being incredibly bullish on the asset class and still trying to keep that HODL on our balance sheet.
Yeah, I think
because to continue to be a miner when the halving happens, that's going to be a real big, I guess, hurdle for these big companies like Hut 8 with all, it's a big mining facility. When the halving happens, it's like half the revenue is gone, right? Unless the market pumps, and it usually doesn't pump for quite some time after the halving. So, I mean, people are projecting 18 months or so after the halving that we'd see like some sort of pump or some price discovery at that point. But again, the Bitcoin ETF, who knows what's going to happen, if it's going to be positive or negative for the actual Bitcoin mining community. So it's going to be interesting to see.
That's the big challenge here with any miner is if you can get into a diversification mode, then it would put a lot less pressure on that miner to sell Bitcoin, because obviously they need it for operations, etc. But if you look at the technology that's flowing in, you mentioned, how much was the percentage of miners that are publicly traded? Did you say 25%?
So
real quick. So Andrew said usually at least 3 months. Yeah. So this way, all right, this halving is going to be slightly different, at least in my opinion. Like going down to 3 Bitcoin versus where it's at 625 or whatever, it's like going to be like 312 or something. It's it's going to be way different. I feel like that's just a significant, I mean, it was a significant drop before from 12 to 6, but now it's like 3. There's not much left to go around. You know what I mean? Just at least in my opinion. So I feel like it's going to take a little bit more time to get some more price discovery after this halving, because it's usually, I think if I'm not mistaken, it's been stretched out since the price pumps, right? Like the halving happens, we'll have a pump in price, like whatever. And then it's always, what was it? Like around the halving, and then it was a couple months out after the halving, and now people are projecting around a year to 18 months or something after the halving for it to actually pump to its like all-time high. But who knows? I mean, can't predict the future, right? Yeah, it's just, I don't know, it's gonna be neat. It's gonna be neat to see.
20 to 25% of the total global hash rate is controlled by just the publicly traded miners. And that's why sometimes I think it's funny, because, you know, some of the analysts in the space aren't considering this tremendous, like 75% that's being stood up elsewhere that may never hit the public equity market. And also, just to sort of piggyback on your earlier point, with respect to a spot ETF coming to market, that's incredibly bullish for the asset class. Now, in terms of demand for minor equities, because minor equities have traditionally been a proxy for institutional investment into the Bitcoin space, that could certainly create some sell pressure on the minor equities, because now there would be an alternative. But
yeah, so that's it's kind of like I don't know, it's one of those things where it could be very good or very bad for Bitcoin, right? So the ETF, yeah, it's going to get people excited thinking about Bitcoin. What is Bitcoin? Trying to figure it out. But also, people that are investing into this Bitcoin ETF, they're not investing into Bitcoin directly. The big guys are holding the Bitcoin, right? Like BlackRock, Fidelity, all them. It's not the consumer. You don't own the Bitcoin. You just are trading the spot ETF. So it's, I don't know, it could be good, it could be bad. So it's going to be like, I don't know. What do you guys think about that, actually? Does anybody think it's going to be positive, or is it going to be negative? You know what? I'll put a poll in the chat.
But again, we can certainly, you know, continue that discussion.
Yeah. Okay. So a couple of points that you mentioned there, obviously, is the diversification with miners. You guys' strategy has been pretty evident, I think, in that area. I was looking at this article, JP Morgan jumping in and saying, hey, Bitcoin miners obviously diversifying ahead of the halving. A couple of points they hit on in the article is looking at AI. Now, obviously, we saw, you know, NVIDIA's news, and good for AI in general, but we've seen also a lot of activity in the space as a whole. How big of an opportunity is this for, you know, especially for the publicly traded miners that are out there today?
Yeah, there's obviously been a lot of hype around AI demand. There's now something like a 900 billion total addressable market versus 95 billion just last year. And not all this isn't a case where miners can just easily pivot to support AI infrastructure. Yeah. This is something that has been building into since the beginning of January of 2022, Hive as well.
This is what we've all been seeing, actually. So, like, you know how you guys, well, there's been a lot of talk about vast AI. I'm not going to be one of those guys that jumps into it, to be honest. But vast AI, you guys have noticed that we can't just swap all of our, say, H110, you know, BTC miners into just doing this vast AI stuff. We need, like, you need a decent CPU, a 16-lane slot. You can't just use, you know, a mining rig with risers, 1x slots. So it's kind of, yeah, we've seen it all over the place. You can't just jump into this AI. It's a whole new learning curve, and you do need higher end equipment. So I think that's kind of what she's getting into here. Why does she look so sad? Look at her. She looks really scared right there.
But this isn't a case where, you know, if you're mining Bitcoin, that you can suddenly then plug in a bunch of H100s, A100s, and then start supporting AI. That's not how it works. It's a completely different infrastructure, a completely different cooling system that's needed for that. But where the relevancy of miners sits is the fact that number one, most miners are incredibly good at standing up infrastructure at a reasonable cost, at a much cheaper cost point than a traditional data center, and also. With respect to AI, it's not as latency sensitive as other iterations of compute that normally sits in a data center. So for example, if you're a miner, you do want to stand up this type of infrastructure, you don't necessarily need to be where like close to a major city center where citizens are, which is normally the requirement for other iterations of compute. So again, where miners play a role is number one, Huts and the Hives of the world that have already been building up this infrastructure. But number two, if you're a miner, you know how to set up infrastructure very fast. You've got access to cheap power. And then obviously you still need access to the servers and the chips and whatnot. There is an opportunity there to play in this space.
I want cheap power.
One thing that Caitlin mentioned, this was a Pomp interview. Listen to what she had to say, because she was mentioning miners. Listen in on this clip.
But a lot of people will trade ahead of it. And what we saw, there was a big debate 4 years ago, well, 3.5 years ago, over whether the halving was priced in, and it was not. And this whole question of like efficient markets hypothesis, we all know the halving's coming, so it has to be priced in, right? And it was not priced in, because these are very fundamental things, and nobody, that, you know, the miners will keep mining until the very last minute that their machines are no longer profitable, and then they will all shut them off. They're not trading ahead of that. Maybe arguably because there are deeper futures markets than there used to be. Some of them are hedging so that they can trade ahead of it. But I still think this is going to be a pretty fundamental phenomenon.
So she hit on a couple of things there. Obviously, pressure from the miners to potentially either exit the business if they aren't, you know, from an equipment standpoint or from a power supply standpoint, because that's really some of your biggest cost controls. Which brings me to my question, and that is, if you look at the best mining companies out there and the evolution of where Bitcoin is right now on difficulty level, what we're going to see in this next halving, where are the good miners really focusing, rather than just diversifying their work product, but focusing in terms of energy, in terms of where my access is, all that? Where are you getting that?
Yeah, so I think certainly the good miners are focusing on diversifying their power agreements. So looking at ways to be less reliant on, let's say, for example, plugging in directly to a grid. For example, there's much different grid dynamics here in Canada, let's say, versus Texas, the ERCOT grid. So certainly diversifying your PPA, looking at ways to get behind the fence energy versus, again, just grid connected energy, so you have a little bit more control over that power flow. And also, again, the ability to potentially repatriate that power flow to, again, whether it's AI, machine learning infrastructure, potentially selling power back to the grid. But yeah, definitely, I would say the good miners are definitely looking at, how do I diversify this power portfolio? Because it obviously is one of the main inputs to me being a success in this business.
Yeah. All right, so I've got a quick question for you, and that is this right here. So we've got all these ETFs getting ready to hit, and I just want your fun opinion as to, one, what you think is the percentage of approval. A lot of people are pointing at, we might get some approval this year. If you were giving the odds for an ETF approval by end of year 2023 in percentage points, better than 50, less than 50, greater? What do you think?
Definitely better than 50. And the real reason for my opinion on that is that BlackRock threw its hat in the ring. BlackRock being powerful and largest asset manager, I want to say certainly in North America, possibly the world. Them to throw their hat in the ring and say, this is what we want. The amount of clout that they have had in the markets in past initiatives has been tremendous. And so I think for them to make this call, that is a real bullish signal.
All right, so bullish on ETFs, which could help overall. I think it's just going to, it's kind of one of those things, rising tide lifts all boats. Possibly could be good for, the really good miners who have efficient systems. They've got diversification, all the things that you would need, and just running your business. Normal businesses in all walks of life have to deal with these kind of things. But now we're getting into core adoption, which is what Caitlin was talking about. When you get into core adoption, things start to move quickly. It's just like the tech sector. When it was first beginning, we saw core adoption occurring within all those companies and projects, and boom, now you have, the idea of the whole tech sector driving the S&P. Now you've got guys like Tom Lee, who's coming in and saying we could see a well over 100K Bitcoin on this next run. What is your theory on this? Do you feel like, we hit that 69, it's very possible we could see, a lot of people were pointing at 100, I think even myself. But when you look at this next cycle, what do you feel is a potential target for Bitcoin?
Yeah, so I definitely do think we could see in this next cycle 100K cost per Bitcoin. And that's based on if BTC were to capture even just 2 to 5% of gold's like $13 trillion place in institutional portfolios. If Bitcoin were to capture even 2 to 3% of gold's market cap, that would be incredibly accretive to the price and push it north of 100K. And I think given the amount of new rails for crypto use and utility, the amount of research that's now out, the amount of institutions that are playing in this space, I think it is incredibly possible, very realistic that we do potentially hit 100K, especially with the halving coming up. And there's now going to be obviously a reduction in supply and circulation.
Yeah.
So.
All right, I'm going to check this poll in the chat real quick. So I have you guys at 90% say positive for the spot ETF, positive or negative for Bitcoin. Or 88% now. I'm going to end this poll. 8% negative and 4% show results, not sure. So, I don't know. I mean, booted my camera. That was nice. I think overall, I think it's going to be positive, and I think she's right. If Bitcoin can get even a couple percent, like, you know, of the gold's market when it comes to big money investors coming in and putting money into this ETF, I think it'll help the price of Bitcoin overall. Let's see. What are you guys saying in the chat? I'm going to continue this in just a second. I think Panda's just going on his... You're not quitting nuggies, dude. You're never going to do that. Cut it out. I didn't realize Red Panda Mining had hair. He might. He might. Who knows? I guess we've never seen him, right? All right. Anyways, this is... yeah, let's keep going on this, but I think it's going to be positive, to be honest, overall.
I want to just wrap up on just the obvious. We won't go heavily into the NVIDIA news, but they did perform well. In short, we're going to try to do a full video on that for you guys if you are listening in right now to break that down for you and the impacts on the market. But when you look at AI, the requirements of the equipment that we're going to be seeing moving into the market, obviously NVIDIA, a big player in this, along with other manufacturers, but also the pressure of just being able to get supply chain really in, locked in place to where we can deal with this next real big leap forward in technology requirements for mining Bitcoin. What are you guys seeing out there on the tech front right now in terms of hardware, availability, all those kind of things that challenge you guys every day?
Yeah, so there certainly is a dearth of supply for sure. And that's where I think it's incredibly important and meaningful for any player who's trying to get into the game to have those relationships across the supply chain. So for example, our chairman, Bill Tai, was one of the original hires at TSMC back in the 80s. And so he's also, we've also got a great relationship with NVIDIA and a couple players across the supply chain, but for sure, having those relationships in place is incredibly important. I do think in general, though, it is interesting to see how the CHIPS Act impacts the availability of these chips and also repatriating more manufacturing of them to the US. Right. So I just read this morning that TSMC is going to be setting up shop in the US. They are expecting some tax breaks from the CHIPS Act. But now there's some consternation because they want to bring in Taiwanese workers versus American workers. So all of those are really interesting things that I'm personally watching because obviously this demand for AI is not going away. And I'm also watching the natural resources space. So none of these chips are made possible without natural resources, which we also have a dearth of. Uranium, lithium, cobalt, manganese are all needed in these chips. So that's another, from an investment perspective, area that I'm really watching because that's another area where we see a ton of supply constraints as well.
Yeah, it's interesting that you say that because I've had more and more analysts and friends of mine that we talk about these kind of things, and that's one of the things they point to is the raw materials to really watch in terms of an investment opportunity. Last question to you, Sue, and that is, you guys had involvement with the game called EVIO. Where are you on this right now? Because I know you guys are doing some other alternatives around diversification. Where does HUD 8 stand today on kind of helping the Web3 space move forward?
Yeah, so our high performance compute infrastructure. So again, for your audience who hasn't followed the Hut 8 story, we bought 5 traditional high performance compute data centers in January of 2022. And part of the thinking there was the deal came with a little over 300 existing enterprise customers. So in the gaming space, in the special effects space, in the governance and financial services space. And we're certainly still providing that Web3 level of compute support that games like EV.io require within those data centers.
All right, so you're still in it for the long
Big
haul.
time.
So any plans to go further into that sector in terms of data centers and really expanding the portfolio?
So unfortunately, where I am right now,
can't talk about that.
My lips are sealed, but we're very pumped to update you guys once we get on the other side.
I can't wait for that interview, because that's when we'll find out everything that's happening in the real world of Hut 8. But anyway, hey Stu, it's always great to have you on the show today. Thank you so much for stopping in. We appreciate it.
So that was a pretty cool little interview, right? I think overall it's going to be good for. I don't know if it'll be good for miners, but I think it's going to be good for Bitcoin as a whole. Let's see. Aru, yeah, I don't know what the hell's up with YouTube and them deleting comments in the chat. It does it to me too sometimes. A pain in the ass, to be honest. All right, let's see. So breaking through in the Bitcoin ETF battle, what happens next? There's a 15-minute video here. What else did I have here? Grayscale lays out the next steps after a huge victory against the SEC. Which one do I want to listen to? Which one do you guys want to listen to? Let's see. Let's do the breakthrough in Bitcoin ETF battle. What happens next? I want to see what they have to say here over on ETF Edge with CNBC. So let's get into this and then we will wrap things up. But yeah, let me know if you guys have anything else you would like to talk about before we get out of here.
Our go-to place for everything exchange traded funds. I'm your host, Bob Pisani. The U.S. Court of Appeals for the D.C. Circuit sided with Grayscale in a lawsuit against the SEC, greatly improving the chances that a Bitcoin ETF will be approved. What's next? Let's ask Matt Hogan. He's the Chief Investment Officer for Bitwise Asset Management. He's one of the 9 applicants seeking approval for a Bitcoin ETF from the SEC. Craig Solomon, the Chief Legal Officer for Grayscale, which brought the suit. And Jeremy Senderowitz is an attorney with Vedder Price, who has been representing ETFs for close to 20 years. Craig, I want to start with you. I know you were personally involved in this case. You're the Chief Legal Officer for Grayscale. It was a unanimous decision. How are you feeling? How's Grayscale doing?
Yeah, so first, Bob, thank you so much for having me. It's great to be here. We're feeling very, very good about the outcome of this case. Yesterday, a panel of 3 judges ruled by unanimous consent in Grayscale's favor. It's a win for us, it's a win for our shareholders, and it's a win for the whole crypto community. But just taking a step back, this is really a culmination of something that started back in 2013 when we first launched GBTC, ultimately with the intention of eventually converting it into an ETF when permitted by the regulatory environment. Fast forward, we refiled this application to convert into an ETF on the same day the first Bitcoin futures ETF started trading. The reason why we did that is because we took the view that if the commission is okay with Bitcoin futures, which are derivatives of physical spot Bitcoin, which is in GBTC, they must also be okay with spot Bitcoin ETFs. Unfortunately, we were denied the following June, and so again, that very same day, we filed this lawsuit. Yesterday represents the culmination of all of that work with this 3-judge panel ruling in our favor. So it's great progress for our ETF efforts and a really positive step forward.
And the court agreed with you. Essentially, they said Bitcoin futures, Bitcoin spot, like products.
Right.
You prove one, you have to prove the other. Matt, it seems like the ball's in the SEC's court right now. Game this out for us. What happens next?
Yeah, I do think the ball's in the SEC's court. I think Grayscale did a great job taking this to court, making convincing arguments. And what it means is that the SEC can no longer deny spot Bitcoin ETFs on these concerns around market manipulation and surveillance. It had already blessed Bitcoin futures ETFs. Those track the spot price of Bitcoin. So it has to allow spot Bitcoin ETFs under that standard. Now, there are other requirements in place, and the SEC and issuers like Grayscale and Bitwise and BlackRock will go forward and discuss those other issues with the SEC. But I'm pretty optimistic that this was a major step forward for the industry, a major win for investors, and puts us hopefully on the path to seeing a spot Bitcoin ETF launch here in the US sometime in the coming months.
Jeremy, I read the ruling, and given how harsh is the word I would say the ruling was, it would seem there's a fairly high barrier for an appeal. I mean, what grounds could they appeal on? The court said Bitcoin futures and Bitcoin Cash are fundamentally similar products. You approve one, you have to approve the other. It seems unlikely that an appellate court would reverse that. But you're the lawyer here. What other arguments could they make if they wanted to appeal?
What do you guys think? Do you think we're going to get an appeal on this this court ruling? Let me know. Oh, you can do that.
Well, it's tough to say. I didn't see in the ruling any obvious grounds on which on which the Supreme Court or the full DC Circuit could seize upon to overrule it. In addition to the resounding nature of the decision itself, it also helps the fact that the 3-judge panel that heard it was a fairly diverse panel in terms of politics and background. So there isn't an obvious partisan slant or bias that someone could point to as potential grounds for appeal. It's always possible that the SEC could argue that the court didn't properly credit the SEC's discretion that they're entitled to exercise both under the statute and under relevant precedents that are still in effect governing the Administrative Procedures Act. But I agree with you that based on both the lineup of judges and the evidence presented by Grayscale and affirmed by the court, it looks like it would be a high bar.
Yeah. I don't want to put you on the spot. You've argued the other side here, but what grounds for appeal would there be? I mean, you're the lawyer. I know you're representing Grayscale here, but
I've been through the opinion many times. I have to say it was essentially the best possible opinion that we could have gotten. The court really leaned into the common sense and compelling legal arguments we've had, which is that futures and spot, for all regulatory purposes, for all ETF purposes, are essentially the same. So you have to treat them the same. I think it's a very clear argument to understand intuitively. We also gave quantitative analysis from Professor Bob Whaley, who is the inventor of the VIX index.
Yeah, I know.
He did a years-long study showing that futures and spot were 99.9% correlated, which is to say they are the same for ETF purposes.
I wonder if they're regretting the decision to approve Bitcoin futures, because that was the mistake, if you want to call it a mistake, that they made. I mean, once they committed to that, as the court pointed, they were essentially committed to the concept.
I would not call that a mistake at all. That is
obviously
good for
not.
investors.
But
it's good for the Bitcoin
people
community.
At the SEC who think that this is a mistake.
I don't think so. I think they saw a reason why they were able to get comfortable with Bitcoin futures. They trade on the CME. They saw the surveillance that takes place there and feel that can account for things like fraud or manipulation. Our view is that that surveillance can also account for any concerns in the underlying spot Bitcoin markets. We got to an impasse with the SEC. It was a professional disagreement. We chose to, pursue this in litigation, which was not an easy decision to make. It's not something we take lightly just to our regulator, but it was something we felt we had to do on behalf of our investors.
Well, you moved the ball forward, and it turned out to be expensive.
Yeah, yesterday the court agreed with us. I will say, though, it's not technically back in the SEC's court today. Under the federal rules of appellate procedure, there is a 45-day window where they can appeal the decision, and so we just have to wait that out and respect that process.
Well, but so let me take the other side of
this.
So
they have 45 days to appeal the actual court ruling. Interesting.
Matt, if the SEC chooses not to appeal, what kind of time frame are we looking at to get these to the market? And there seems to be a consensus that if the SEC approves a Bitcoin ETF, they should approve all of them at once. Matt and Craig, maybe you can both agree on that. I mean, does everybody at least agree on that? And
you guys ever see Jeff Dunham? I feel like this guy's one of the puppets. Like I feel like he's just got that face. He's so stiff and straight. It's hysterical.
It's a time frame. Time is assuming there's no appeal.
Yeah, I think lining up multiple products to launch at the same time would be the best possible outcome for investors. Create a competitive field. You would likely see the lowest prices and the best quality products. So I'm hopeful that that's the outcome we see, but of course we don't know that. In terms of the timeline, these 33 Act Bitcoin ETFs move on a very specific regulatory timeline with deadlines for review. The next deadline that is up is actually at the end of this week for the Bitwise application, but the SEC could delay that review for another 45 days. Ultimately, the calendar ends and a decision needs to be made sometime toward the end of the year or early next year. But we don't know what's going to happen, Bob. But that's the window you're looking at. Sometime in the next, let's say, 5 or 6 months, we should see significant progress.
You agree with that? I mean, assuming there's no appeal.
Yes, I mean, I'm focused on GBTC. Our circumstance is unique in that we have an actual fund today with billions of dollars of AUM. It's trading tens of hundreds of millions of dollars in daily volume. It represents nearly 1 million investors across all 50 states, all wanting it to be an ETF. So the stakes are just a lot higher for us, and that's what we're really focused on right now, getting this over the finish line and converting GBTC into an ETF.
Jeremy, could the SEC come up with some kind of new rationale out of nowhere about why this application should not be approved and then dare Grayscale to sue them again? So, I mean, we know they can't use this argument that there is not a market of sufficient size to prevent manipulation. Okay, that's gone. But are there any other arguments they could come up with?
It's certainly possible they could come up with something, and I certainly don't want to give the SEC too many creative ideas about where they other ways they could possibly attempt to reject these filings. But for the last several years, the SEC really has put all its eggs in this basket of that was rejected by the court yesterday. So it will, I think, be pretty difficult to make a compelling argument that all of a sudden there's a new issue that they haven't focused on in these denials for several years, but are important enough to continue denying these applications.
You know, Matt, there is one other possibility here, and it's sort of a scorched earth possibility. The SEC could just kill the Bitcoin futures ETF, right? I mean, is there anything that would prevent them from doing that? I don't think that's going to happen, but they could say, well, we made a mistake and kill it. Is that a possibility at all?
I think that's highly unlikely for two reasons. Yeah. One, I don't think we have any example in the historical literature of that happening. And the other thing is that ETFs are good for investors. People want access to Bitcoin. They're buying it in a variety of ways, including unregulated ways. An ETF would just make it safer, cheaper, more efficient, and add regulatory protections to help investors get the exposure that they're going to get anyway. So I think that would be a step backwards for investor protection. And I don't think that's what the SEC is trying to do. They've been careful and cautious about reviewing Bitcoin ETFs for the last 10 years. Early on, the market really wasn't ready for a spot Bitcoin ETF. I think the argument we and others are making is now we are, and I think that's still the likely path forward.
Craig, I want to just switch gears a little, talk about these applications have surveillance sharing agreements with the exchanges that would allow for sharing of information about market trading activity, about clearing activity, and about customer identification. And there's also ways to ensure investor assets can't be diverted by an exchange to an unauthorized party. And I know that was an issue with FTX. Is that enough to reduce concerns about market manipulation? Because these concerns about market manipulation haven't gone away because of this ruling, but address that issue about the surveillance.
Never going to go away.
On the concern, any concern you might have about the underlying Bitcoin market structure, that is an identical concern for the Bitcoin futures. So it's just inconsistent to be okay with futures, but not spot. And in terms of surveillance, this was in our 19B4, it was in our lawsuit, it was in the court's opinion yesterday. We all agree that the surveillance on the CME that has oversight over Bitcoin futures is sufficient to account for surveillance in the underlying Bitcoin market structure, which is what would price directly in these ETFs. So we already have surveillance sharing agreements. It's with the CME. I think having more surveillance sharing agreements with exchanges like Coinbase is definitely another positive step forward, but it's not a need to have in this Bitcoin ETF context.
Yeah. Meantime, Matt, these Bitcoin futures are doing well ever since BlackRock said they were going to go in here. I was talking to ProShares yesterday. Their Bitcoin strategy ETF, the original one, BITO, just passed $1 billion in assets. So this is definitely stirring up some interest.
Absolutely. Look, you have the world's largest asset manager saying Bitcoin is going to be an investment that many institutional investors want to make for the foreseeable future. That is a huge endorsement. Our view at Bitwise is we've entered or are entering the mainstream era of crypto, where it goes from being a niche asset to a mainstream asset. ETF Progress is one example of that. BlackRock is one example of that. And people levering or moving into those Bitcoin futures ETFs is an example of investors trying to get in ahead of that trade. If you think it is going mainstream, then it's an attractive asset in many ways, even today.
Craig, what is the future for Grayscale here? I mean, I wonder how much of good news here. Now, you charge 2% right now for the Bitcoin fund. I don't think you're going to be able to charge 2% once it goes into a Bitcoin ETF. I mean, maybe I'm wrong, but you're likely going to have 8 other competitors out there. I mean, how do you feel about all the competition now? And are you going to reduce the fees?
Yeah, so we've actually been very public about that for over a year now. We are going to reduce the fee for GBTC upon ETF conversion. But right now, we do have this time period where we have to honor the court's process, await this 45-day clock, and then we are otherwise very focused on actively and constructively re-engaging with the SEC to get this over the finish line.
Jeremy, give us a 30,000-foot view of the SEC and how they came out of this. Was their reputation damaged at all here? I mean, I'm thinking about a larger issue about their ability to create rules and regulation. Was there anything broad that you can come away from this that say, well, the court has reduced the power of the SEC, or did they just make a simple legal error here?
Okay. Well, I think in this particular case, there's an argument that the facts lined up really badly against the SEC, such that the court was able to rule against the SEC without necessarily casting aspersions on the SEC's larger regulatory agenda, whether in crypto or other areas of the financial industry. That said, I think it is noteworthy that the court did feel that the SEC exceeded its bounds so dramatically in this particular case, and at the very least, it signals that the appeals courts are not necessarily going to be deferential to whatever rulemaking or other activities the SEC might undertake. So while this doesn't have direct precedent effect with respect to any of the other potentially controversial activities the SEC might be undertaking, it does serve notice that the courts will be watching.
Yeah, I agree.
All right, everybody's saying this guy looks like Peter Griffin. Put a 1 in the chat if you think so. 2 in the chat if you don't care.
That completely. That magic phrase, arbitrary and capricious, which is, I guess, part of the Administrative Procedure Act, is the key thing to focus on here.
Oh, God. Holy shit, that was loud. All right, well, that's that. All right, guys, that's the news for today. You guys have anything else you would like to say or talk about before we get out of here? This is the end of the show. Hopefully you guys learned something today. This is it's going to be neat to see where Bitcoin mining, like big Bitcoin mining facilities, actually end up if they're, they stay profitable, or if things tend to just get effed up. Ding fries it done, says Sadie sometimes. Oh, you guys are terrible. Anyways, Cape Cod Crypto, what's up, buddy? Good to see you. Let's see. It's great to have your back to work. We all missed you last week. Thanks for sharing. Oh, Alltrack, appreciate you, buddy. Appreciate you. Yeah, we were away camping last week and the week before that. So if anybody doesn't know, we my wife went into the like the walk-in because she had blurry vision, and they ended up sending her to the ER for a CAT scan rather, and then they kept her for an MRI, and then they found out that my wife has been diagnosed with MS. So MS is like more or less, there's a whole bunch of different things to it, but it's multiple sclerosis, right, where it can actually like affect your brain in certain ways. So it was pretty devastating. It sucks, right? But it's something we can deal with. It's just one of those things we got to get through. So I asked her if it was okay to mention. She said it was fine. So yeah, that's what went on the last like entire week. I was like, I just need a break from YouTube and just kind of deal with my wife and stuff. So that was that. But other than that, we're good to go. Hopefully we can continue to do this every morning. So I'll be back bright and early tomorrow morning. Tomorrow is Friday. Today's Thursday. One more day till the weekend. You guys hopefully have a good day at work, and I'll catch you guys bright and early tomorrow morning. Peace out. Love you all. Thanks for the support. Later, guys.